Hello, welcome to my YouTube channel, Dream Home in Arizona. Kamaya Newcomb here. Today we're talking about tax benefits, tax deductions, everything taxes. Why? Because it's the end of January and it's tax season. But first, my disclaimer, I am not a tax professional. You need to, of course, talk to your tax advisor. But let's talk about some of the things that you can benefit from if you own a home. There are some tax deductions. But let's get through those definitions first. What is a tax deduction or a taxable deduction? What does that mean? So what is a tax-deductible expense? That is an expense that you can claim on your taxes that's going to lower your taxable income. Let's face it, with the rising cost of everything, it's pretty important to save as much as possible on your taxes this year. Now, buying a house can be kind of expensive. You're looking at the down payment, the closing costs, there's fees involved, like appraisals, inspections, termite inspection. You know, there's a lot to it. And of course, after you close and you own the home, there's also maintenance, taxes, but there are benefits to owning your own home. There's actually quite a bit. The benefits far outweigh the expenses and the hassle it may be to actually buy the house. But let's talk about some of the tax benefits that you get from owning a home. So we're going to be talking about tax deductions. So the taxable deductions for your home that you can take. Now there's itemized and standard. I'm not going to get into the specifics of either, so because everyone's situation is unique to them. And it's always, of course, again, important to talk to your tax advisor. But there are some deductions that you can take when you own your own home. So let's go through some of those. So one great thing that you can do when you own your own home, as opposed to renting, is you can deduct the interest rate on your home. Each month, a part of your mortgage payment goes towards the principal. Now that's the portion of the loan that you borrowed against. That's your principal balance. And another portion goes towards the interest rate. Over the entire life of the loan, you can deduct a portion of your interest rate that you pay over the years. There is an amount that it kind of stops at. It depends on your marital status. So again, talk to your tax advisor and they'll let you know what those amounts are. It's pretty high, so you can do this for quite a few years. A few other ways are deducting things like discount points. Those are the points that you pay when you first got your mortgage. That lowered your interest rate. Now, if you find yourself working from home like so many other Americans these days, you can deduct the cost of setting up your home office, or at least a portion of it. You can even take off things like office furniture that you needed to put into your new home office equipment, computers, printers, papers, pens, pretty much the whole shebang. So if you find yourself like so many other people now working from home because of this COVID crisis we had a couple years ago, no big deal. You can take that off on your taxes. There are other expenses that you can take off if you do have a home office. Some things include like homeowners insurance, homeowners association fees, utilities, fire insurance, possibly flood insurance, refinancing cost, depreciation of the home, even domestic services. Another thing to remember, of course, is if you own your home, you're going to be paying real estate taxes. And you can take those off on your taxes, weirdly enough. So don't forget to mention those to your tax advisor as well. But another thing that you can take off on your taxes as a tax deduction is home improvements. Not all of them. You can't take off like a can of paint or something like that. But if you are putting in like energy efficient windows, solar panels, that kind of thing, especially things that are energy efficient for your home, you can take those as a tax deduction. There are other types of improvements that you can make towards your home as well. Some that are necessary, like improvements to age in place. This means that if you have to make improvements to your home in order to stay in your home in your later years, like putting a handrail in for the shower or even a walk-in shower. So these are necessary improvements. For example of a couple of other ones, you might need to do some updating for medical reasons. Now this includes anyone that lives in your home, you, your spouse, or any dependents. So anything that you do to make their lives more comfortable or things medically necessary that needs to be done, you can take those off as tax deductions too. So those are just a few of the tax deductions that you can take off if you own your own home. There are definitely more, and of course, again, talk to your tax advisor. Those are the professionals, those are the people you need to talk to. But there are some things that I should probably mention that you can't take off as tax deductions. Loan origination points, title insurance, any forfeited earnest money, closing costs, down payment, those are the things that you really can't take off as tax deductions. Again, talk to your tax advisor. So if you're looking to buy or sell in the future, definitely give me a call. And remember, if you're paying to live someplace, you're definitely buying a home. Either buying it for yourself or you're buying it for your landlord. Let's make it for yourself this year.